Michael, nickel is a commodity that is hugely important across the world, but it has been volatile in nature with price and demand pressures driving huge changes in recent years. How do you find covering it?
Nickel is quite an interesting and challenging commodity to cover. Its uses have evolved and for over a decade now has been one of the critical energy transition metals, in addition to its traditional uses in steel alloys and such as stainless, etc. This explosion in battery demand has led to a huge amount of innovation in nickel products and processing routes.
And how has this changed how we in commodities research regard nickel operations?
Historically, you'd look at a typical mine producing a sulfide concentrate, and it could be treated the same as any other base metal operation, concentrate to smelter for downstream processing and on to a final grade one product. Then other mines would be producing a laterite or would be either treated at a HPAL plant on site or shipped out to a smelter for production of an NPI or ferronickel product. Now, with the increased demand for battery chemicals and precursors, the processing routes are more complex and sometimes intertwined. Particularly now, we have laterite smelters switching between matte and NPI production. Because of these trends in the nickel market, Skarn, back at the start of 2025, modified how we present our data on energy and emissions from nickel operations.
And why were these changes important?
Unlike, for example, zinc, where you can simply provide a product which compares all the mines producing zinc in a concentrate, etc., and another product showing smelters and refiners, energy and emissions, nickel doesn't have as clear value chain steps. Some assets are mines with initial processing, producing a concentrate via flotation. Other were mines with more complete processing to a saleable product, such as sulfites, MSP, MHP, such as HPALs. And others are mines with no on-site processing, such as Indonesian laterite mines with non-integrated pyrometallurgical facilities. Our previous GHG and energy products had an uncomfortable mix of all of these, and there's no easy way to compare apples with apples across the primary nickel industry. We consolidated the basis of our nickel product to be on a downstream facility basis.
How does that make comparing energy use and GHG emissions easier?
There's a couple of broad points. The first is the range of assets we track are far closer together in the value chain. It does mean that we split some operations down the middle, such as HPALs, separating their mining operation component from the processing component. But all the assets that we're comparing are all more comparable. All still have their upstream emissions accounted for in the E1 metric, with the mining data still forming the backbone of the dataset. Secondly, while this still ranks operations with a broad suite of nickel products, we also have the option of viewing the emissions normalized to a smaller range of products, refined nickel or sulfate. This allows you to benchmark on the same basis.
And this has always been a challenge, I think, for anyone covering the nickel industry. Does this mean all the process routes are modeled for each asset to refined metal or sulfate?
No. So all of our assets are modeled on a site-by-site basis, be it mines, smelters, or HPAL, and these are based on the products that they produce. Our normalization conversions are based on the theoretical energy requirements and the subsequent emissions needed to convert those on-site products to an end product. It's a higher level conversion. We don't make assumptions about shipping intermediate products to other regions, and the emission factors used for electricity are based on the emission factors for the local plant. We just take the required technology, energy demands, and apply that to the local conditions.
And what other exciting changes are coming up for the Skarn products?
For nickel and for all our products, on the research team side, we're working to model all our assets with separate market and location-based Scope 2 emissions. Historically, as the requirements and industry understanding of emissions reporting has evolved, we initially had a single Scope 2 figure, which doesn't distinguish between increasingly reported separate location and market figures. Also, there's frequent skepticism about the validity of market-based reporting as it pertains to assessing the environmental performance of an operation. So we're going to introduce the ability to view Skarn emissions data on an either-or basis, looking at location-based metrics or market-based metrics. It's all about shining a light on the details and improving that transparency. Another exciting change is our ongoing work to develop and expand our web platform, making our data more accessible to the clients.